Stock item valuation methods. Inventory valuation method is one of the most important aspects of accounting system. The value of consumption for costing system and the value of stock in hand in accounting system depends on the inventory valuation system. On setting advanced entries in masters in inventory voucher configuration during entry alteration of stock item at the right part of the stock item screen under behavior section, you set up the following options in respect of computation of stock item value. Costing method. At costing method, select the default computation methods of consumption and stock in hand from the list of costing methods as described next. Market valuation method. At market valuation method, select the default computations of market value of stock in hand from the list of market valuation methods as described next. Costing method. Costing method means the computation method applied to compute cost of consumption and stock in hand. At stock item entry alteration screen, at costing method under valuation section, select the default computation method to compute cost of consumption and stock in hand from the options available. By default, the specified method would be applied to show the value in various inventory reports. However, alternate method may still be applied at the time of printing any specific report, offering the option to specify valuation method. At zero cost, the item value would be valued at zero cost. Normally rejected scrap having no realizable value or free items are computed at zero cost. Average cost, the item would be valued at weighted average cost for the current year. FIFO, the consumption would be valued at first in first out method during the current year, so the stock in hand value would be valued at latest purchase cost. FIFO perpetual, the consumption would be valued in first out from the purchase time of oldest stock, so the stock in hand would be valued at latest purchase cost. Last purchase cost, the item would be valued at last purchase cost. LIFO annual, the consumption would be valued at last in first out method during the current year, so the stock in hand would be valued at oldest purchase cost. LIFO perpetual, the consumption would be valued at last in first out method from the earliest period, so the stock in hand would be valued at oldest purchase cost. Monthly average cost, the item would be valued at weighted average cost for the current month. Standard cost, the item would be valued at standard cost specified in stock item master. Market valuation method. Market valuation method is used to determine the realizable value of an item. For example, potential disposable value. The unrealized profit loss to be realized on sale of an item is equal to closing value as per market valuation method minus closing value as per costing method. Costing method is normally relevant for fungible tradable item, while market value is normally relevant for manufactured tradable products. Here you select the default computation method for market value of stock in hand from the following methods. At zero price, the item would be valued at zero value. Normally rejected scrap having no realizable value or free items are computed at zero cost. Average price, the item would be valued at weighted average cost for the current year. Last sales price, the item would be valued at last sale price. Standard price, the item would be valued at standard sale price specified in the stock item master. As per accounting standard in financial statements, PL statement and balance sheet, the value of inventory is to be taken at lower of value as computed under costing method and market valuation method. However, it is not clear how the market valuation method is implemented in Tally and how it affects the inventory system.